like, let's get this shit underway. I think that's probably the big thing. Let's switch gears over to macro itself, because there's a lot of really important things that happened in the macro market this week.
Yeah, I mean, so it kind of kicked off on Wednesday. So we got the FOMC minutes at the usual 2 p.m. It basically the gist is they seem a bit concerned that they're going to have to keep raising rates more than projected, like if the bond prices and stocks continue to rally. And given they had some US job openings that fell less than expected in November, that kind of keeps the pressure on for the Fed to keep this runway to hike. And obviously we'll talk about the NFP in a minute, but that was kind of what came out. And then the other thing we had was like one of the Fed in Minneapolis guys was like, no, we should be hiking 100 basis points through next year. It's like 5.5%. He's like super hawkish. And I think that just really was telling in the price of stocks. They trimmed gains immediately after this came out, and like Bitcoin as well sold off from the highs. We were very close to like the 17,000, sorry, and just broke down through to like sold off about $150 straight after that came out. So it's kind of.
But I think that's like, honestly, I think if you're a discretionary macro trader who deals in anything crypto, the trade for probably the next couple months is marking your calendar in red anytime J Pow speaks.
Just see what the sentiment is.
And short it. Because I fully don't understand it, because we talked about this in the last episode. The Fed has telegraphed exactly what it plans to do, and it's sticking to it. For better, for you can agree with him or you can't, but they've told you exactly what they're going to do, and they've been doing it. And if you believe for any amount of time that the Fed's going to walk in and be like, oh, by the way, we're just super dovish and we're going to print some money and crypto is going to go up and we really care about the stock market and we really care about your crypto gains. No, they don't. J Powell only cares about the metrics that he cares about, and he does not give a fuck about stocks, and he extra does not give a fuck about crypto. So if you expect anything other than him being super hawkish anytime he opens his mouth for the next 6 months, then I think you're absolutely fooling yourself.
Well, I mean, it's funny you say that. That's kind of like so we got NFP today. So, payrolls were up. So that's, a signal that you should potentially continue your hiking progress. You haven't made any significant impact to the jobs market, but a lot of the jobs that were added were coming from leisure and hospitality. I think those were two of the main sectors. So they're kind of still not even back to pre-COVID levels. So, an economy that's still recovering from that, you'd expect larger gains there. And then the other piece was there is a notable decline in wage growth. And so that's the thing now why I think people are jumping on, that they'll be slightly less aggressive. Maybe going for the 25, definitely instead of the 50, which there was a big jump in the 25 basis point hike for the Fed.
Yeah.
But yeah, I mean, we're going to get the CPI, I think, next week on Thursday. So, No,
I think what you're going to see is the CPI is going to continue to go down. And the Fed has explicitly said that it's watching the labor market. So the labor market is now going, like NFP is now going to move markets more than anything else. Like CPI is kind of priced in and it's going to go down. But the problem with the labor market is the labor market lags the economy. So it takes some time for that to flow through. And the real question is, do you believe the Fed that, that they're watching the labor market and that they have the ability to synthesize that information in a meaningful way and to accurately say, oh, well, we understand that the labor market is still a little hot, but let's look at the nuance of that market and, let's try and understand whether or not, this leads to a downturn future down the road. And I think like the initial reaction to NFP today was that the numbers beat the prediction, and just in terms of like overall job growth. And then after the fact, people thought to themselves, "Oh, actually, but there's some subtleties around this," and so they revised their predictions, and so things tended to rally back a little bit. But it's going to be a bit of a game where people are looking, at those nuances, and they're going to play this game of greater fools that basically says like, how is the Fed going to respond to this data? And to be honest, it's kind of like a sick and perverse thing where if you're bullish stocks in crypto right now, you're secretly hoping for the middle class to get routed and laid off and have an economic downturn so that your stocks in crypto can go up. So it's my
thanks for that happy
2 cents on the matter.
Yeah. I guess to finalise then, the Europe CPI also came out today. It was their inflation for core CPI is record high, it's 5.2%. If you strip out energy and food, that's the difference, and that's continuing up. The total CPI print came down, so overall prices are down from double digits, but definitely no signal for the ECB to stop their hiking, which we've talked about could potentially further exacerbate the debt crisis that's looming in Europe. But
I think no matter what you think about the U.S. economic circumstances, you look at Japan and you look at Europe, and they are double fucked compared to the U.S. And whatever we're going through in the U.S. 6 months ago is what Europe is going through right now, and I don't think it's going to be an easy road for them.
Yep.